Hey, morning, evening, whatever. It's 6 a.m. in Thailand, I can tell you that. So almost midnight in the UK. Haven't done a video for a while because it's been easy to explain what's been on my mind just in the morning emails, but this does require a video. Okay, so looking at the dollar index, I expected this double top to trigger a move lower from June, which indeed it did, and we pretty much caught the whole move. So I was very happy with that. There were some significant profits on that week. And then I spotted a potential bottom in the dollar. So we got out of our shorts, got into some longs last week, and then ran that whole move every day last week. We headed higher. We ran that move right up until Friday around lunchtime UK time, when we were getting out of our long positions. I sent you the email to tell you that I was getting out. And the reason I was getting out was because the dollar index at least was testing this trend line here. So my concern was we test the trend line and we turn around and go lower, and indeed that's what appears to have happened. I'm going to actually open this chart up a little bit. I've got the weekly chart below, but you don't need to see that right now. Okay, this is a bit clearer. So yeah, you can see everything working. Trend lines, fibs, moving averages. Now we've got this big negative candle here. So this does indicate that my feelings were right and that we were going to reverse. So I should really have been getting into short positions here, but I'll show you a reason why I sort of held back on Friday, partly because it's obviously Friday afternoon. There's no point in piling into big positions on Friday afternoon and then having to run them all weekend. You never know where the market might open on Monday if there's some sort of major event over the weekend. Right, so the dollar index chart as it stands looks quite negative, and look, we do have a potential head and shoulders pattern here. Left shoulder, there's the head with a double top, which is quite negative in itself, and then here's the right shoulder almost being confirmed with this negative candle. All we need now is a break below 94.20, 94.00, and we've got the confirmation of the head and shoulders pattern, which would be extremely negative, and we could see something significant to the downside, possibly down as far as the 93, well certainly 92.75, maybe even 92.25 area. However, right, so actually I'm just going to show you the weekly chart before I move on. The weekly chart, there we go, does look quite negative. The fact that we rejected these important longer term trend lines and the fairly negative candles, certainly here and here on the weekly chart, very overbought. So on the weekly chart at least we do need a correction. But then it gets a little bit more confusing. And I'll show you that with the Euro chart. Okay, so quick recap with the Euro chart. We were looking for the market to reverse along with the dollar index. So it did. We've got a really nice double bottom here with very long candle wicks to indicate strong buying on the weekly chart. This is all happening just above the 50% fib and strong moving averages again on the weekly chart. So we started to recover, and then last week we pulled back as expected. This has been less easy to read, I've got to say. We overran one of the 23.6% fib. We overran it quite significantly, in fact. Went up to 117.90, which was overrunning the fib by 26 pips or whatever. Confused me. I stopped out before I got back into my short position. Anyway, then we headed lower. Now, this is not a clear pattern. Nowhere near as clear as we've seen on the dollar index. And I just don't know what to make of it yet. If we were very oversold, I might say, okay, let's just go for it. But we have got the bullish blue candle from Friday's session. I just can't make anything of this pattern, so it worries me. I like to see something a little bit clearer than this. You know, that we could, for example, just turn around from 17.10 and turn lower again. I actually think we probably will go lower initially at the start of this week. I'm actually going to show you the dollar yen chart now. I haven't had a clue what's going on in the dollar yen for quite a long time. And when you look at the daily chart, you can see why I'm in. Difficult to read. We collapsed from the beginning of the year into March, and then made almost a V-shaped recovery into May. And then we had a little dip down to 100-day moving average, and we've taken off again. There was this whole period of really doing nothing. With the fact that we broke up through this trend line going back to Jan 17, so what's that, an 18-month trend line, looks quite positive. Would have thought we would have at least tested the 61.8% fib at 113.23, but we didn't. And now we have this negative candle from Friday, but we haven't hit any major resistance. I can't just suggest a short on the basis of one candle, even though we're a little bit overbought. So again, the dollar yen for me remains fairly confusing. I did want to sell up in the 113 area. 113.23 would have, that sort of low, sorry, the 113.20, 113.30 area would have been a good short, because you have got a decent long-term Fibonacci resistance up there. You have got the 200 week moving average, but we didn't even make it that far. We do have this negative candle, but let's see if we can push on. So for right now, I'm leaving the dollar yen alone. I'm still leaving it alone. I just don't know what's happening in there. Okay, Kiwi versus the dollar. New Zealand currency held good support from 61.8% fib at 67.39. We had this trend line also going back to May 2017, so a year long trend line that reinforced this level, and we were very oversold. So I was very happy to buy it, although look how far we overran. We overran as far as 66.86, which I found very difficult. We did bounce back, we did rally, so we were long last week. We did take advantage of that move. Now we're back down testing this trend line and various support. The low for last week down at 67.23, the Fibonacci line at 67.39, and the trend line around 67.31. Will it hold? Doesn't look that compelling on the weekly chart. So I'm wondering if we at least retest the low that we saw at the beginning of the month to give us a double bottom. That would at least be some sort of bullish pattern, and also we'd have to see what candle forms when we retest it. But right now, don't know what to say about it. Buying it, I suppose, here with a stop below 66.80 would be a trade, but you're looking at 100 pip stop. It's not something that works for me. I'm looking for something less risky and a clearer pattern. Now the Aussie dollar I called higher in the last 2 weeks or so, only because we touched on the 61.8% fib support at 73.25. There wasn't really anything else there, and I had it in my head that the dollar was gonna sell off anyway, so I felt confident in predicting a rally for the Aussie, and that did actually work. Didn't quite get to the 75.00, 75.10 selling opportunity. Unfortunately, we reversed just below there. Where did we reverse from? 74.83. I think I actually had 75.95, 75.05 as my selling opportunity. We just missed it by 12 pips, so that was tough. Again here, not really a very clear pattern. I guess you could argue for an inverse head and shoulders with a left shoulder, head, right shoulder. But if I stick the neckline on, we still have to see quite a significant move higher before we even talk about breaking the neckline. So really, this whole 75.00 area again would be important on a new return. 75.00, 75.10 will be the key resistance. Buying it now in the hopes of completing a head and shoulders pattern is high risk. We're right in the middle of the range. We could easily come down and retest 73.10, 73.05, and then potentially form a double bottom to push us higher. But right now we're in no man's land, and putting a position on for me would be high risk, not worth it. Canadian dollar's also been giving us some great trade opportunities lately. We had this double top here with some very negative candles, and we caught this move lower. We caught it as far as this excellent support down here, this 23.6% fib and 38.2% fib around the 30, 70, 30, 50 area. Bang, even got a small double bottom down there. So that was great. We managed to not only take off our shorts, but get into longs and take advantage of this rally all the way up to 132.18, which was just 2 pips from that 132.20 target actually. I thought we'd push through it, but we didn't. We reversed. We spent the last couple of days just going sideways. On the daily chart, doesn't show us much. 132.20 is obviously going to be key. If we can push higher through there, then we'll be probably testing this trend line up around the 133.00 area. But right now, again, no clear pattern. Sitting in the middle of the range, kind of in no man's land as far as putting on a trade goes. This trend line here really isn't strong enough for me to want to trade that in particular. We will have to watch the 130.60 area down here, of course. So again, I can't see any strong reason to have a position on in the Canadian dollar versus the US dollar right now. Looking at the weekly chart, again, sometimes there's just not really anything to do. And one thing I do is try and keep you out of the market when it's just too risky to be in it. So unfortunately, I think this might be one of those times, certainly at the beginning of the week, where we kind of have to just sit it out and wait for the best opportunity to come along. Having said that, the gold weekly chart does offer a trading opportunity. We've got this very long trend line going back almost 2 years, which you see was tested over the last 2 weeks and held perfectly. Just below, we've got 200-week moving average at 1234. So as long as we can hold 1240, 1234 in what is a very oversold market on the weekly chart, we can start to reverse and maybe continue this longer term bull trend. I mean, it's not much of a bull trend, is it really? But we could at least get back up to 1270. So buying around here would offer a decent potential profit. Worked really well when we tried it the first time. These long gold positions were gorgeous, weren't they? As we went, and again, just missed a 23.6% fib at 1267. We topped at 1260, almost 1266. I didn't have the balls to suggest a short up here. I wanted to see at least that 23.6 tested with something to tell me that the market would turn around. But you know, that's markets, isn't it? They're not perfect. They don't do everything exactly as they should do. But at least we do also have a double bottom here. So I am long gold. I will buy some more if we dip towards 1240, 1238, and I'll have to have a stop below 30. But if I'm right about the dollar reversing, this would at least give us some short dollar exposure.